Hi, this is Dave from Market Trading Concepts. It's Saturday, February the 18th. Just wanted to take a look at the week closing from Friday the 17th. And I'm going to start off with the Dow. I was long from last week, as I mentioned in my last week's video. So I bought this pullback somewhere in around here, not right at the bottom, but in this area here. And the next day, it popped up here and everything looked great. I held on to my position. I was up about, I'd say about anywhere from 13 to 15% in my options. And then we had, this day where it came down, and then we had this day where it gapped up. Now, this was the interesting day, and it's really interesting how the market does this. It basically shook both sides of the market before it actually went on its merry way. So what I mean by that is it gapped up here, and this morning when the market gapped up, I was up about, I'd say, somewhere around 15+% in my options that I had bought when the market was down here. And I thought, okay, everything was great. So we gapped up in the morning, and we started to close the gap. And once we came down, the gap was somewhere around here, close to the 12,800 level. That's been a level of contention where, we've been fighting to break through it. It's been support, it's been resistance. In fact, it's actually been resistance because we haven't had a clean break from that level at that point. So basically what happened here was, I'm sitting long here, everything's looking great. The market started to sell off, and then the day looked really weak. This was actually some pretty serious selling this day. And once it got below this line, the 12,800, and then it bounced up again, I closed out my long swing position. I didn't like the way it was acting intraday. I booked about 8% profits, which wasn't a lot, but it was better than taking a loss. But I just, it basically shook me out of the move. And it came back down here. And I generally don't like to, buy subsequent tests of the 21 period moving average. Like I was okay buying it on this day, for example, but when it came back down and it tested it here, that was a warning sign to me. And as long as it holds this level, you're fine. But once it breaks this level and closes below the 21 period moving average, or it starts, significantly dipping below it, that's a bit of a caution sign. So basically what happened here was I got shook out of my position when it started coming below this level. I booked about 8% profits, no big deal, better than taking a loss. And then the next day we had some weakness as well, and then bang, we were off to the races. So I had the market, bias pegged as moving higher, based on my analysis of the weekly charts, which I'll flip over to in a second. And but it's funny how it looked like this was a day where I was long, I got shook out of the trade, and people who were short, probably up in here somewhere or anywhere in this area, they probably got shook out of the trade as well, when it started to move against them. So you have the longs down here, they get shook out. The shorts up here get shaken out when it comes here, and vice versa. So I hope that makes sense. Let me try to explain that again. So if you're long down here and you gap up here and it starts selling off, you get shook out. And then if you're short up here and it starts coming down, if you're okay, let's try that again. So if you're short, let's say somewhere down here, when the market started coming down, and then it gaps up here, and you're short, then you get shaken out of the trade. So it kind of shook the trees on both sides of the market and ultimately went higher, which was what we were generally expecting to happen. But we're out of that trade. So that was a long explanation of just telling you that I got shaken out of a trade. I apologize for that. But looking at the weekly charts, everything looks still really good. I mean, if you look at the weekly charts, We didn't even come down to, let me grab the pen here, we didn't even come down to the 8-period exponential moving average, and it looks like we're, kind of burning rubber away from this 12,800 resistance level, and we look like we're on track to test some of these higher levels, 13,000, anywhere from 13,000 in the Dow Futures to potentially 14,000. So that's possibly still in the cards. And I may try to reestablish a long position if we kind of pull away and then come back down to about the 12,800 area. And it looks like it's going to hold that area. I may try to establish a long right in that area. So that's still a possibility. Now, the other interesting thing, if you look at the daily chart, it just fired another long squeeze. The Hakanashis are blue. The MACD hasn't rolled back over yet, so that's a bit of a warning sign. The trend is moving a little bit lower. That's a little bit of a divergence, where you've got price moving higher and this moving lower, but you do have a bright blue bar here, which is what you would expect. Now you have a long signal at 12,895 on this setup with a potential target of 13,000. So I think that this is still a real possibility. And I think that, only time will tell, but this is still in the cards. I think it's a real possibility. And there's no real reason to look at the short side at this point in time. In fact, that is really a long ways off. So just taking a quick look at the sister markets, if you look at the Nasdaq, I mentioned in one of the videos from the other week that the Nasdaq was kind of lagging behind, and it still had a lot of room to go to the upside. So the weekly chart still looks really strong, and we had a test here of the 8-period moving average, exponential moving average on the weekly chart, and it's not unusual to fill at least or to hit at least half the width of this Darvis box in terms of the distance from this point to this point, projecting it upwards. So I think we still have some upside in the stock market. On the daily chart, you have a long signal here at 1,266, and a target of 1391. So we're right in around 1360 almost. We closed the week out, so that would denote another 30 points of upside. So that's quite a possibility, and I think we're going to see that. Okay, and then after saying that, I just realized that I said the Nasdaq, but we're actually looking at the S&P futures. Okay, so that applies to the S&P futures. Now let's have a look at the Nasdaq, and the Nasdaq is basically the same situation. You still have everything intact, and you have an ultimate target of 2,893 here, according to this setup where you're projecting the Darvis box out on a 1-to-1 risk to reward ratio. So you still could see much higher levels in the Nasdaq as well. Everything is kind of flying on all cylinders on all three markets. I don't really see any major divergences. There was a bit of a divergence on the intraday on the Nasdaq on Friday, but Friday was options expiration, and you can expect some unwinding of positions, especially when you look at a stock like Apple, which was a high flyer, and it hit some new highs and went parabolic. As a matter of fact, let's have a look at that chart too. So just taking a look at the Apple chart, Friday was options expiration. You have unwinding of positions, and you had, this is a weekly chart, so this is some pretty explosive action. You had a long in Apple here on this setup. I didn't trade this. I wasn't even really watching it. I haven't traded these stocks in quite a while since I started focusing more on the stock index futures. But I used to, going back about 2-3 years ago, I used to trade mostly Apple, Google, and RIM exclusively. Those were my vehicles of choice on a swing trading and day trading basis, just because I felt that they led the economy, and they basically still do. At least Apple and Google do. RIM's a bit of a dog, but that's unfortunate considering it's a Canadian company. But, nothing personal as a stock. It is what it is. So if you look at Apple here, there was a long signal at 426.74, and this angle just went parabolic. It hit a high here of over 520, and it did it in a pretty short amount of time. And then you can see this was kind of a blow off top, and it's now in a weekly doji, which is just basically you had the selling here. People probably don't want to cut their positions yet, and you have a little bit of indecision, but you hit the target here at 490.20, projecting this Darvis box on a 1-to-1 all the way out. So this was a really good, if we were watching this would have been a really good Darvas squeeze setup on the weekly chart. You had, all indications that everything was going to move higher when the signal fired, and it would have worked out great. Hindsight's 2020. We weren't watching it. We didn't catch it. That's fine. But what's interesting is that when Apple pulled off here, that's probably why, on options expiration on Friday, you had a lot of, intraday divergences between the major indexes, mainly between the Nasdaq and the other, sister indexes. So I also wanted to have a quick look at gold. Gold is in a pretty interesting situation here where, you had this downtrend line within the context of a massive weekly uptrend. You had this MACD crossing to the low side. You had some selling off, but then, and you had red Hakanashis. But then what you had is a situation where you didn't make a higher low. In fact, you made kind of a sloppy double bottom here, and right at this trend line here, you had a crossing of the 8-period exponential and 21-period exponential moving average. So you had a bit of a crossover here. This resistance did not hold, and you probably had a lot of shorts get their butts handed to them, where they just got stopped out. Like, this is a pretty massive move from 16. Let's call it 1686 to this level here over 1740 or something like that. That's a pretty healthy stop out move, where if you're caught on the wrong side of that, especially in the futures market, that's really going to hurt. Now it's kind of in an interesting situation where you've got some doji action on the week, some indecision, or some possibly at least at a minimum a pause, but you also had like a sloppy long squeeze form here. This is actually a long squeeze because the momentum is going higher. You're back to blue Hakanashis. You're right at the point where this MACD is crossing over to the high side, and this is still long bias. So looking at the daily chart, you've got a little bit of divergences here, but you really have this kind of tight range going on in gold, where everything, this is not positive, but could easily turn back up to the upside. This is still positive. So you've got a little bit of a mixed action going on here between the daily and the weekly. But if you look at this situation where, let's say this isn't a squeeze, and then let's say this goes back to a squeeze, and it starts pushing through, then I think what you're going to see is some more upward action. I'd be hesitant to want to short this when you're above the 21-period moving average on both the daily and the weekly. So I think it really makes sense to see if we could break these levels here before really looking at doing anything with gold. And what would be nice is to get like a fresh squeeze going on here on the daily. Maybe if it consolidates for a little bit, goes into a squeeze, and then it starts pushing higher while it's in a squeeze out of this Darvis box. So, okay, so I just threw a couple of lines on there. I cheated and paused the video recording, but we're looking at 1336.84, if I'm reading that correctly, about 1737. and then you have on the weekly 1767. So that's that's quite a difference of 30 points between the two. Right at 1766, you have some pretty major price resistance. Price highs, swing highs on the daily chart. So, but it's not uncommon, if you get a situation where it pushes up through here, you might fight a little bit of the resistance. This actually could be a decent buying point, depending on what the price is doing at that level when you break above these highs. If you think of it from a stair-stepping perspective where, once you break above that stair, you're going to hit the next, crux of the stair, for lack of a better description. So that's something I'll be watching. It's not the best trade around, in my opinion. It's a little bit more cerebral. It's a little more touch and go. If you really have to think about it that much, it might not be the best trade to look at this time. Now I wanted to look at the oil market this week. The oil market is pretty interesting because you had a lot of resistance at about $100 a barrel, and you had a really strong up week here, and basically this strong up week here is a situation where you're coming back up to test some more stronger resistance, price resistance, where you were knocking on resistance's door here, and now you're doing it again. You've got price resistance in here, and basically I think that level there it's a magnet. If you look at the daily chart, you have a situation where let me just jump back to the weekly chart. Blue Hakanashis, you're losing momentum on the squeeze, and you have potential crossover action which could bounce higher. So this isn't really telling us too much, although it is generally positive. So then you have, positive here on the trend. And if you look at this, you have some of the same price resistance here, which we tested and then pulled back from on Friday. But you have this area here at about 105.77, which I think just needs to be tested. It's a magnet. You've got a fresh squeeze that fired off here on the daily. You're good to go here. You're good to go here. Good to go. Good to go. So, from a daily perspective, you have this kind of cup pattern, which, you could get a situation where it kind of does this and then pushes higher, or it just kind of pushes higher through this resistance, and at least test these levels at around 105.77, if it can get through this immediate resistance. Now, there's no real good fundamental explanation for why oil is going up, except for the fact that you have some geopolitical tension in the Middle East, which has been in the news quite a bit. But the other reason could also be oil is priced in U.S. dollars, and we should probably have a look at what the U.S. dollar is doing in order to put this into context. Now, I have not looked at the U.S. dollar yet, so this will be a fresh look for me. So if we look at the U.S. dollar, what it's looking like is, all right, so we looked at this a few weeks ago, and we had this support level in here, which we seem to be holding, and you've got this trend line, you have this 21 period moving average on the weekly chart. You have potential rollover here in the MACD. So, it's really holding support. If we start to get, which I don't think would be unusual, you get another kind of trend line in here, and this could come down and test that. I think you might, hit those targets in oil. When the U.S. dollar goes down, it's not unusual for things that are priced in U.S. dollars to go up. It's kind of like inflation, right? So, I think that's a possibility. Even if we hold in here in the U.S. dollar, you might just see, oil just kind of jump up there and do its thing anyways. Just to test it. It seems like those areas, the market likes to test areas of liquidity or test areas of major support and resistance. So I think that's a possibility. We might see prices as high as maybe $1.06 a barrel. In the crude futures. Okay, this video is about 20 minutes now. I wanted to keep these videos around, 10 to 15 minutes, but there's a couple other things I'd like to talk about, so I apologize for the length of these videos if you're watching. Now, the other reason why I think oil is going to go a little bit higher is this is an interesting situation. This is a setup that I watch for reversals. It works on intraday charts, it works on daily charts. Not sure if I've seen it on a weekly chart, although I'm sure I have. You can kind of see it in this situation here, and I'll explain what it is. Where you have this downtrend line here and then a break above it. That's kind of a sloppy example, but here's the setup here. This is what I call a Darvas Squeeze Reversal, and the way this works is basically what you have is you have Darvis boxes that start turning lower. You have price action breaking the bottom of this Darvis box. Let me just change this to red since we're in a downtrend. So if you look at this and you say, okay, now we broke the bottom of this Darvis box, right? And then we came up and we didn't really break through the high, but we ultimately broke down again through the bottom of this Darvis box. So we're making a series of lower highs and lower lows. You've got your lower highs here, you've got your lower lows here, but then you get a situation that happens, and here you even had a Darvas squeeze short signal here. It was against the major trend. It didn't work out on a one-to-one basis, but you could have grabbed a pretty decent mini swing trade there and grabbed at least half the width of this box when this fired short. So they do tend to at least work a little bit, but I don't like to trade this setup against the trend. I like to trade it with in conjunction with this trending indicator. So the situation here though is the Darvas squeeze reversal signal works like this. So you have that situation where you're stair stepping lower, and then you've got this inflection point where you can draw a trend line in the price action, and strangely enough, the price action here, I'm sorry, not the price action, but the trend line where it touches the edge of the Darvis box is really an inflection point, because you see a situation here where these have turned blue. Now you go back to a squeeze, so you have a potential Darvis squeeze setup happening where you've put in here a lower high. You can see that here. Let me just zoom out a little bit. So let me make this a little bit bigger so it's easier to see. So here's the setup. You have a downtrend line. The downtrend line touches the edge of the Darvis box. You have a Darvis squeeze setup initiating here because now you're in a squeeze. Price is breaking through the top of the Darvis box while you're in a squeeze or close to a squeeze firing off. In this case, you're still in a squeeze, and these are my favorite. These are my favorite because then you have a lot of room still to go. So you have this turned higher, so you've got bullish, 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 but this is in a downtrend. So now what happens is you've broken the top of this, now you've got a long signal, you've got a crossover in these moving averages here. Everything's pointing higher. So usually what happens is these are pretty powerful signals where they're powerful reversal signals. And you usually get some pretty quick action out of them. And you usually really catch people that are on the wrong side of the trade, kind of with their pants down. And they really get flushed out, and you get some pretty strong, violent action going the opposite way, and the trade usually works out pretty nicely. Now I'm just going to put this on pause. I'm going to find an example in the Dow where I saw this setting up and things didn't look clear, but from the perspective of this Darvas squeeze reversal, it was pretty obvious to me what was going to happen. Okay, so let's have a quick look at this then. So here's the Dow. We were in a downtrend, and you had a situation where in the Dow Futures where you had a short signal fire, and the target was met eventually on a daily basis. Then what happened was here you have this downtrend line, and a squeeze formed here, and you went back to, to blue. Let me change the color of this pen. Okay. So here you have this squeeze formed here, and you have these blue Hakanashis. You have the MACD rolling higher, and then you didn't quite have this. You had it rolling higher right around this area and here, and maybe one day before, right in there if you zoom in. So that all kind of coincided in this area here, where you had a break of this downtrend. It's kind of a sloppy break, but you had a long signal here. And at the time when I was watching this, I definitely didn't want to be short anymore, because I knew there was a potential reversal taking place, which you can see here, 1, 2, 3, and 3 days. In 3 days, it hit its target. So you have all these people that are probably short. You can see a really sloppy kind of higher low put in place. That's usually pretty important. You like to see, a higher low be put in place so that you have some energy to go back up to the upside. If you just have like a situation like that and then like this, it's usually not as powerful. You want to see a situation where you have at least some confirmation that, you've got a bit of a higher low put back in place, and then you're moving higher, so that you have the energy to break above this level. And that's basically what happened. The squeeze, coming out of the squeeze tells you you're returning back to volatility, you're going to get movement. You have these indications coming into play, and then within 3 days, bang, you hit your target, and you probably had some people caught with their pants down on the wrong side of the market that were expecting this trend line to hold. And when I see this situation take place, I either trade it, or if I have a short overall bias, I step aside and I let it unfold so that I don't get caught on the wrong side of the market. Now you also have a situation here where you had this really, really, really sloppy action, and you had a potential Darvas squeeze reversal setting up here, where you did have a higher low, you did have a long signal, and it broke above it, and then it ultimately kind of failed. You were really early into the squeeze, but here's really where your trend was still quite down. It wasn't even really ready to turn here. So that was one of your heads up. But to be honest with you, if I was short here, I would have closed out my short positions. And then you came back into a situation where you had a really, really kind of sloppy price action period right in here. And then ultimately what happened was, you got a situation where you came in here, you put in a bit of a higher low, you didn't make a lower low, and then you had another signal here which coincided with the break of this trend line, and you can see that this one worked and it went higher, but it was really, really sloppy action, and it would have been hard to kind of gauge it in real time until you saw this kind of taking place, and then you saw that it was holding the 21 period moving average. So that is a setup that I haven't talked about before. It's called the Darvas Squeeze Reversal. It's basically a Darvas Squeeze setup that takes place at the end of a trend and signals, the reversal of the trend, at least on that time period. Okay, so just getting back to oil for 1 second here then. So you had a situation here where you had this Darvas Squeeze Reversal take place in the OIL, which is the oil ETF, and it's signaling some higher targets. You can see in 1, 2, 3, 4, 5 days you've almost hit the target on the daily chart. So that's quite interesting. On the weekly chart you have a bit of a cup pattern, but you don't have any signs that you're going to get any fresh volatility. So I think the safe bet is probably hitting that target and then reevaluating from there. If we take a quick look at the USO as well, the USO fired a recent long breakout 2 bars ago, 2 days ago, because this is a daily chart here, and you have the same situation where you have this. I'm not going to draw it very well, but you have this downtrend line, and you have a long signal, and basically a Darvas squeeze reversal because you're going, against the trend. Now, this was easier to tell because you had this trend indicator, my trend indicator, rolled back above the zero line, went positive, the MACD was positive, this momentum was going higher, Hakinashis were blue, and it was, you had higher low in here, and it was a little bit easier to kind of pinpoint this move. Now I didn't trade it, I was looking at it when it broke out here, and I didn't trade it, but I did want to establish a long position. I just decided to kind of step back and watch what happened in real time. Okay, so we're 30 minutes into this video, and I apologize, this is a really long video. Seems there's quite a bit to talk about this week, or I just can't stop talking, one or the other. So I was talking about some of the currencies in last week's video. I'm still long the Aussie dollar. So what basically happened here was I was looking at this Darvas Squeeze setup from the weekly chart, and once we had a long signal form and we had the long breakout signal here, I was looking, I looked at the daily chart, and I zoomed into the daily chart and I said, okay, I'm looking for the first pullback to the daily chart, and on this day, I believe it was this day, we had a pullback. And then I zoomed into the 5-minute chart, and I explained this in last week's video, how I entered this trade. So the next day we popped up. I was up about 13% at the open the next day, which was a pretty good, it was a pretty good pop. And then, we came all the way back down, and I think I was down 5% on my position. The next day we popped up, and I was up, I think 10 or 12% on my position that day. And then this day I was up. When we hit the highs, my position was up on Thursday, I believe it was up about 16%. Now, normally I would say, okay, you know what, that's good enough. I'm going to close my position out, and I'm going to take that and call it, a couple of days. Not bad for, 3, 4, 5 days of work. Now, then what happened was I held on to the position, and it came down here, and I think I was down 2%. And I closed maybe 2 or 3% up on the day. Now, the reason why I'm holding on to this position is because I think we're probably going to push through this resistance here and at least test somewhere up in here on the Aussie dollar. I think we're going to come at least somewhere up in here. So I'm looking for, maybe 50% return on my option, maybe come up here 75% the width of the box, and I'll probably be up about, if we do hit it and I'm able to hold on to my position long enough, maybe 50 to 75% on my options, which is really what I'm looking for, because I'm basing this on a daily chart. Okay, I'm basing this on a weekly chart, and I'm expecting much, much bigger moves, and I'm expecting the pressure on the weekly chart to hold. It's not like a 5-minute chart where, you can be down, you can be up. On a weekly chart, you're looking for this strength to hold and to get at least a couple more weeks of strength. So I'm going to reevaluate this to see if it's going to push through this resistance level and see if we can get a move half the width of this box, which would probably coincide with anywhere from 25, 50, 75% return on my options. And that's really what I'm looking for. And I'm willing to hold on to this position until that happens, or to cut it loose if we get a close below this 21-period moving average on the weekly chart. If we start to get closes below the 21-period moving average on the daily chart, I'm really going to reconsider the position and decide whether I want to cut it loose even earlier at that point in time. Okay, I just want to take a quick look at the Canadian dollar as well. So the Canadian dollar, we looked at this last week. We haven't broken through this resistance here. We don't actually have a valid Darvas squeeze signal. We do have a potential breakout signal. And until it breaks this level, that signal won't fire. This is all looking very positive, though. It's very constructive. I think we'll probably get through that level. And let me just zoom out the chart and have a look. See, this is almost like a sloppy Darvis Squeeze Reversal signal as well. These signals are obviously the most powerful when you're in a situation where the boxes are stacking higher and you don't have any baggage above you, baggage in the form of price consolidation or resistance levels. So it's usually a much better situation when you're in a stronger uptrend. But you've got a situation where you're in this indicator, the trending, where you're cycling back to the upside, and that would denote at least a couple of weeks of strength once and if you can get through this resistance. So the safe trade would be, to either wait for a breakout on the daily chart, which you sort of have a signal here on the, on the daily chart, you had a signal back here with a target of 102.80, and we haven't yet hit this target yet here. But you also have a situation where that's not looking great. This is coming back into a squeeze. This is starting to roll higher, and you ignore this short signal because it's against the obvious trend. This is a failed signal. That's fine. You're not trading it against the trend. We like to trade with the trend. So you have a situation here where you could actually fire a long signal. And if we get another long signal here, we'll pretty closely correlate with this long signal here. So that's what I'd be looking for with an intermediate target of at least $1, $1.0280, $1.03. I think it's pretty doable, but we need to chew through this resistance first, and it looks like we'll probably do it. Okay, so looking at the British pound now, this is a really interesting situation that we talked about last week, where you've got a break of this downtrend line on the weekly chart, and you're starting to see some bullish indications on the British pound. This hasn't yet rolled to the high side, but if it does, I think we're good to go. But you have a situation here. See, it broke this trend line, and it came back down, and it tested it, kind of tested it here, and it kind of tested it here. So that's some bullish action where you see these tails where it's closing off of the lows in the candlestick chart, where it's closing off the lows. It's a potential sign of accumulation, something that Rob Hoffman from Power Charting and from Trade the Markets, he runs a really good room there. He talks about quite often where you get situations where you get a bar and then it closes pretty substantially off the lows. It's a potential sign of accumulation, and I like that analysis. I like using it also in some of my work. And like in this situation, I'd say you probably have that situation happening here. The daily chart's not as telling, but the weekly chart is starting to look constructive, and I'm looking for some movement maybe back up to this area here, where you're going to get more of a real powerful signal, where you can probably, if we can clear this level here and we get a weekly Darvis squeeze setup happening, we can probably get some pretty strong upward movement. Now, the distance from here to here is about the same as there to there, but to me it would be a safer entry getting an actual Darvis squeeze breakout situation happening. I'd be more comfortable with that setup rather than trying to front run this and this closing back down below here. I really like to see that come into play, be patient, and look at a potential swing trade when all the stars are in alignment. So, and finally, just looking at the euro, we had a situation here where we did test this 21 EMA on the weekly chart. I think the U.S. dollar we looked at earlier, it's the inverse of the euro. It's at an inflection point as well, where it's holding support on the weekly chart, and it looks, it basically looks like the opposite of the euro, which it's supposed to. And you've got situations here where neither one of the charts is really indicating exactly where it wants to go. And I think this is a situation where you just step back, let it happen. It looked like we were going to fall off a cliff here. We held this support. We held this support in here, and there's obvious signs of accumulation here. And now we've closed back above the 21 period moving average on the daily chart. we're going back into a squeeze. You've got a lot of mixed signals here, and honestly, what do you do with that? You just, step aside, give it time to prove itself out, and then look for the next pullback opportunity. That's all you can really do. Or wait until it actually looks constructive and where you think that you can have a safe entry point on it. Okay, I lied. Now, this is the final instrument that I want to look at for real. We're at 40 minutes here, and this is a little bit ridiculous in terms of the time. I need to tighten up these videos. But basically, this is something that I've been watching, where this is the DBC, okay, and the DBC is a commodity index tracking ETF, okay, the DB commodity index tracking ETF. So this is something that I don't watch a lot, but I do have it, in my in some of the instruments that I watch, because what I like to do is I like to look at the corn, soybeans, and the wheat collectively, the grains futures. And sometimes when you look at some of these ETFs, you can get some indication on, direction. And I'll tell you what I mean by that. So I'm looking at the DBC on the weekly, and it fired a Darvis long, okay? A Darvas Squeeze long signal. Now, what that means is the squeeze hasn't actually fired off, but the Darvis Squeeze has. So the criteria for that is, you get a break of the Darvis box while it's in a squeeze, or when the squeeze has recently, just recently fired. So this is kind of a heads up. These are the most powerful signals that I like to watch for, where the squeeze hasn't even fired, but you get a break of support or resistance from the Darvis perspective. So if I look at that, this is basically like a Darvas Squeeze Reversal taking place, and if this works out, you potentially have a lot of movement for upside. I'm really watching this. I haven't taken a position in it yet, but I like what's shaping up. If you look at the daily chart, you have an uptrend here. You have a loose uptrend here. You had a long signal fire here, and if I zoom out on the actual chart, you have a little bit of upside left on the daily signal. But what I really like is these weekly signals are very powerful, and you have a situation where you're at $28.69 with a potential move up to $32.03, where I think you have logical, if I'm not mistaken, I think you have logical price resistance up there as well, in the form of that swing high on the weekly chart. So I've drawn that line there at 32.04. You'd probably want to get a little bit in front of it, but you have a good potential if this moves higher. You have a good potential to kind of follow through with this. It's an early stage, and I think what I'd be looking for is a potential pullback. Looking at a pullback on the daily chart to time it better, where you get a pullback on, let's say, to the 20 period. 21 period EMA on the daily chart as an entry point, with the expectation that this is going to follow through on the weekly chart, and that the trend is going to maintain, stay intact, and that you're ultimately going to hit this target. So this is something that I'm going to watch. Hopefully I can stay focused on it, and I don't, forget about it. I do that, sometimes I do forget about trades, because I'm trying to focus on my day trading. So sometimes I miss the actual pullbacks, and I need to be a little bit more diligent in setting up alerts so that I'm alerted to that, or I check in once a day or something like that to make sure I don't miss it. So this is a potential setup I'm looking at. Looks really interesting. If you look at the actual and I'm at 44 minutes here, so I might as well just keep rolling with it. If you look at, let's look at the grains. If you look at the corn market, the only thing I really want to point out is they're really sloppy. So you'd probably get no real indication of, which way to trade this. I mean, what do you do with these charts? You do have some potential action coming in on this daily chart, but the price action it's really really sloppy. I mean, I can't think of doing anything with that. If you look at soybeans, you know, it's really sloppy too, although it is looking a lot better in terms of, you know, you don't have any fresh signals coming out, but you do have some potential reversal taking place in soybeans. And actually, the daily chart looks, you've got a long, oh, my bad, I missed this. You have a long Darvas squeeze on the soybeans on the daily chart. So it might actually be soybeans that are driving this ETF higher. That's a possibility. I'll have to look into that more to find out how this ETF is weighted. You know, if it's weighted towards you know, all three of the grains evenly, or you know, what exactly makes up that ETF weighting. But if you actually look at this looks pretty constructive. You got a nice uptrend going now here in the soybeans, and you have this you know, this Darvis squeeze that fired off, you know, a little while ago. So this is actually pretty constructive. And I mean, if you wanted to, I wouldn't day trade the soybean. I mean, I would day trade the soybean futures, but I would not swing trade the soybean futures, because you know, you have to understand the risk and how those markets move. If you get stuck on the wrong side of a lock limit up or a lock limit down, you know, it could be very, very costly. So looking at this, you know, I could see looking for, you know, a potential decent pullback with the expectation that it's going to, you know, resume higher and hit some of these higher targets. So this is actually interesting. If I look at let's look at the wheat chart, and this might actually be what's driving this DBC play as well. If we look at the wheat chart, okay, you know what? This is looking interesting too. Now, we have a situation where, you know, you've got a potential Darvas squeeze reversal taking place, higher low on the weekly chart, a long signal, a pullback. You would need to break back above that level. This is looking good. This is looking good. This is looking good to the long side. This is a bit of a red flag. And the daily chart is really sloppy. I don't like that at all. So this is really early stage. This is something to watch. But this is a potential heads up, basically, that the grains might be you know, coming back to life from a swing trading basis, from a swing trading perspective. You know, looks like it's being led by soybeans at this point in time. And you know, if you think that this maybe is going higher, a good way to trade it may be looking at this DBC ETF. So that might be something to look at. I'm going to keep my eye on this, and if I see a decent opportunity, I'm going to look at establishing, you know, a small swing trading position using the DBC if everything else looks like it's kind of coming into play. So that's all I have for this week. We're at 50 minutes now. My bad, that's really, really long, and I'll try to keep the future updates a lot more focused and shorter. A little bit tired today. It's Saturday. We're heading into a long weekend. I hope everyone has a fantastic family day on Monday. And we do have a meetup coming up on the 29th of this month. It'll be at the market trading offices. Everybody's welcome to come. It's going to focus on... Okay, I stopped the previous recording and I started a new recording here. I'm going to attach it to the end of this video. So as I was mentioning, the meetup, you can go to meetup.com and you can search for Burlington Investment. And here's our meetup group. It's a group that we meet up once a month. The last Sunday of every month is the present schedule. And this meetup will focus on it will basically focus on just talking about different investment ideas. We have about 34 members at the present time. We're networking with some other groups in the area, and we'll be expanding, you know, the range of offerings at the meetings. But they're basically special interest meeting groups where, you know, people that are interested in investing and trading can get together, share ideas. Sometimes we bring professionals in to you know, to highlight their wares or to you know, teach us stuff. just talk about different things that we're looking at, that we're personally looking at. So this upcoming meetup, if you want to join, you can just come to the Burlington Investment Idea and Active Traders meetup. These take place at the market trading offices at the trading floor facility in Burlington. You can just click on the Join Us link. There's 2 opt-in levels where you have to join the meetup site, and then any group that you want to join, and there's a lot of different groups on the meetup site, but then you have to also join up to the specific group that you're interested in as well, the meetup group. So this is our group here, Burlington Investment Idea and Active Traders Meetup. We're going to be meeting on the 29th of this month, and let me just click on the link here. So if you come to upcoming meetups, we have one scheduled. Okay, I don't know why my internet's a little bit asleep right now, or the site itself is asleep. Okay, so I think you actually have to be a member of the group, and basically, if you click on the upcoming meetups, it will take you to the current meetup that's scheduled. Here's some pictures from some of our last meetups. We have about 8 people scheduled to attend now. That'll probably come closer to 10 or 15, closer to the actual date, Sunday, February the 26th, and we're looking at a pretty good showing. We're looking at a good group of traders and investors that will have a lot of interesting ideas. We'll probably talk about some real estate investment ideas as well. I know there's a lot of people in the group, including myself, who do invest in real estate and who are interested in expanding those investment opportunities. So this should be a good meeting just to talk about different places maybe where we're thinking of putting our money in 2012. Of course, they're all our own opinions. We're not providing advice. We're all just a bunch of people that are interested in the same things, talking about what we're looking at, what we're doing. So if you're interested, feel free to come to the site, join up. You can send me an email if you want more information through the actual site. If you come to and click on the actual the members, investors, and active traders, you can see here I am here with my dog Napoleon. He helps me trade sometimes in the office here, and you can actually send me an email right through this link here. So if you want to contact me, feel free. I'll look forward to any emails, any questions, and I'll look forward to seeing you at the next video or at the next meetup. Thanks. Have a great Family Day weekend.